also the instructor, Delonte, definitely make sure that any questions that you have does not go unanswered. Very genuine, very transparent, and really loves what he does. And that's one thing that I look for in a mentor.
This broadcast is brought to you by Bold People Get Rich. For more investing knowledge, be sure to visit www.bpgrinc.com.
Now sharing what he's learned with others by hosting courses on investment strategies.
To be able to pass that knowledge on to other people, it makes me feel like, I'm doing something that's valuable in life. This broadcast is brought to you by Bold People Get Rich. For more investing knowledge, be sure to visit www.bpgrinc.com.
First thing I want to let y'all know is you can start a trading account with as little as $10, all right? And if you're not greedy and trying to get into this and try to make a whole bunch of money really fast, you would understand that even getting into it with $10, maybe you may not make a lot of money, but you can begin to learn the markets with some skin in the game.
This broadcast is brought to you by Bold People Get Rich. For more investing knowledge, be sure to visit www.bpgrinc.com.
But what this lesson is about is, like I said, for the working person. You do not have to be in front of the computer to actually participate in the foreign exchange market. Did y'all know that? Did you know you don't have to actually press buttons to participate in the foreign exchange market? You don't always have to be in front of the screen.
This broadcast is brought to you by Bold People Get Rich. For more investing knowledge, be sure to visit www.bpgrinc.com.
Welcome to Markup Mondays, where every Monday at 8 p.m. Eastern Standard Time, we analyze the financial markets, educate the community on trading and investing, discuss world news and popular topics. I'm your host, Delonte Brady, Chief Analyst and six-figure earner with Bold People Get Rich, and here are some things you need to know about this broadcast. During the market analysis portion of this call, we often find areas in the market to trade or make our investments. To be updated on these entries, exits, and trade management, make sure you tap the 3 dots on my Facebook page and change following to favorites. This way, you'll never miss an update. To receive investment knowledge, exclusive deals, and updates, click the link tree in my bio and subscribe to our mailing list. If you're viewing this broadcast on YouTube, to be kept up to date, make sure you hit the like button and subscribe. This is an event made for the people, by the people, and we love to hear your feedback and answer your questions during the show. So please feel free to comment as often as you like. Lastly, all forms of investing do involve risk of loss and is not suitable for all investors. Increasing leverage increases risk. Before deciding to trade in any financial market, you should carefully consider your financial objectives, level of experience, and risk appetite. Any opinion, news, research, analysis, price valuation, or other information contained in this video does not constitute investment advice. No person or persons in this video is a financial advisor.
Welcome to Markup Mondays. Go ahead and drop a 1 in the comments if you can hear and see me clearly before we continue on. Sometimes we do have technical difficulties on, my part, but I just want to make sure everything is good before we continue. Can everybody hear me? Can everybody see me? All right, good. We are good to go. So welcome to Markup Mondays. We do this every Monday at 8 p.m. Eastern Standard Time. We educate the community on trading and investing in the foreign exchange market, the stock market, and also the cryptocurrency markets. We give an investment gem of the day. Then we go over world news. Rodolfo, thank you. Thank you for your comment. Rodolfo, before the show even started, he actually said, thank you for being consistent and sharing knowledge with people for us to be financially free. And that actually brought something up that I want to talk about. I hope that everyone that's on this call understands that when it comes to building wealth, all right, what we're doing is wealth building activity. And that is exactly what it requires. It requires constant grind, day in, day out, whether you're learning, whether you're in the charts, whether you're trying to find opportunities to enter the market to invest. Building wealth is a lifelong task. All right, it's a lifelong task. It's not something that's going to happen instantly. And the most important thing when it comes to your goals with building financial wealth is understanding the long term and looking at the long term, looking 20, 30 years down the road. Everybody wants to be financially free at some point. Now, everybody's journey is different. As far as when you become financially free, everybody's journey is different. But what I do know is that if we invest now, if we invest while we're young, and even if you're not that young, if you invest now, right? If you invest now, then you're going to increase your chances of being able to be financially free in the future, because the goal is to retire. The goal is to be able to save enough money to be able to stop working, to only do work that you want to do because you want to do it, not because you want to earn money. All right, so that is the goal of building wealth, and then to, of course, be able to pass that on to the next generation and have them in a better position than what we started in. And what that is going to take is consistency. It's going to take knowledge. It's going to take guts. It's going to take grits, because this is not a task for the weak. So let's go ahead and get into it. The first thing I want to do is review what happened last week. We're going to review some of the calls that we called out last week. I actually put together a quick video on that. Then we'll go over the world news. I'll update you guys on what's going on with Russia, Putin, Ukraine, Europe, Biden, all of that good stuff. And then we will get into analyzing charts. All right. So first things first, let's go ahead and review last week. The buy area I would like to buy from is here. But where I'm expecting EU to buy up to, our first rejection would be this area here. If we, break above this, then I would expect this high here to get taken out, this imbalance to get filled, and then I would expect a reaction from the second sell zone. All right, so last week we went 3 for 3 as far as what was called out on Markup Mondays. You know, very simple week, and EU actually ended up, consolidating, which is something I want to go over with the importance of reactions when it comes to using the sniper strategy. But let's go ahead and get into the news now. What we have coming up for the week. I actually added the pound and JPY to my watch list. All right. So as far as looking at news and important news releases, the pound has been added and the Japan yen has been added. So if you don't see it on here, it's because nothing important is going on with it. I'm only looking at red folders now. All right, I used to look at orange folders, but just to cut down on the clutter, orange folders they cause a little bit of volatility, but it's really the red folders that we want to be looking out for. All right, so what's already happened as far as EU on Monday? We had the market composite, and then we also had market composite for the pound. That all happened during the London session. Those were red folder news. And if you're trading the pound and if you're trading EU, you know EU and the pound really hasn't went anywhere. So that news really didn't cause EU or the pound to actually move because we're still trading within a range. Price is still moving within a range. And then a Tuesday, as far as what we have coming up for tonight's London session, we have the IFO business climate. That's a red folder. That's going to be at 4 a.m. Not really expecting a lot of volatility from that. Market manufacturing for U.S. news at 9:45 in the morning. Those are three red folders. We may see some movement during the New York session. On Wednesday, we have the ECB speech, and then we have the GFK consumer confidence. That's going to be at 2 in the morning, and then at 6:30 in the morning. And then this is going to be ongoing. Anytime you see a red folder or a folder with a news speech, that doesn't mean it's going to happen at exactly that time or you're going to see volatility at the time that is listed because anything can be said during the speech at any time during the speech. So just keep that in mind. All right. When it comes to speeches, that's a little more unpredictable, but just be looking out for it around that time. And then on Thursday, we have the Bank of Austria GDP growth. The Bank of Austria, that's going to be Euro news at 4 o'clock in the morning. And then for the New York session, we have U.S. news, GDP growth rate, jobless claims, continuing jobless claims, new home sales. All right, this is going to bring volatility to the market. We got about 4 or 5 red folders for the United States dollar on Thursday. So during the New York session on Thursday, just be on the lookout for volatility. Keep that in mind and definitely allow that to play a factor into your decision making with trading on that day. You know, we also have some pound news for the first time in the week as far as red folders on Thursday. That is going to be towards the evening. All right, at 1900, we have a red folder for the pound. And then on Friday, all right, we have a big day on Friday with EU because we have inflation rate news. All right, that's going to be at 2:45 in the morning. I'm expecting a lot of volatility from that news release. And then during the New York session on Friday, we have durable goods, personal income, then the Michigan consumer sentiment. All right, and I don't trade on Fridays, but if you do, just be aware of those news releases during the New York session. All right, cool. So LDG, I didn't even I haven't even talked about what pairs we gonna talk about, but LDG wants to go over GJ. So since he started it off, if there's anything that you would like me to analyze, go ahead and drop that in the chat. And if we have time, we'll get to it. I'm also going to review some of the pairs that we went over last week, and we'll go over the results as far as what happened. All right, because last week we went over Litecoin for I believe it was Denver. We also went over GJ. I believe we went over AU. But if we went over something last week and you're here, make sure you drop it so we can go back and review that, and then we'll go over what I see for this coming week. All right, so we have gold. All right, Rodolfo wants to know: do you personally scout or long term? I do everything. I do everything. So long term trades, or like swing trades, position trades, those only present themselves so many times a year. All right. So most of the time, what I do the most is I day trade. I day trade the most. I'm not a big fan of scalping, but I will, sometimes if it's like some good movement or I see some good institutional order flow and I really see the market moving and it's trending. But for the most part, I would say 80% of my trades are day trades. And then as far as those swing trades only happen so many times a year. But I do swing trade when I believe I see the opportunity to do so. Right. Let's talk about really quick before we get into the technical analysis. I want to talk about what's going on with Russia because this is on the forefront of the investing world. Really, this is huge. I mean, we're talking about possibility of World War III. So we definitely want to stay up to date on this as investors and traders. You want to know what's going on with the diplomacy around the world. So give me a quick second. I'm gonna share this. Everybody on the call, everybody knows Putin, right? Y'all know Putin is a gangster. Putin is a thug. Like Putin is not somebody. He's not playing around. He is not. He's not messing with America at all. So the chances of war as time goes on, I'm believing is becoming more probable. Let me share this because I got a news clip for y'all. All right, so first major news I want to talk about is, of course, Putin and Biden, Russia, Ukraine, and what's going on with this. And I'll just let you guys, I'll just play the clip. I'm going to play the clip for everybody. Give me a quick second. Oh, they have a different video now. Okay, sorry about that, y'all. The clip that I wanted to play, it looks like they changed the video. But basically, what's going on is Putin was saying that he was pulling back his troops, but what America is saying, and of course we're going off of headlines. We don't know what's going on for sure. Nobody is actually down there to report. As far as I don't have a source that's down there to report what's actually going on, but based on what's going on with the news, Putin is unwilling to talk. They're saying that Biden is willing to meet, but he's only willing to meet if Putin pulls his troops back, and Putin isn't pulling the troops back. All right, they're still lining up, they're getting in position, and like everybody is saying, it only makes sense that eventually they're going to go ahead and invade Ukraine. And once that happens, missiles will start flying, tanks will start rolling, and we're talking about World War III. Now, what that means for us as far as being investors and traders is simple. Be wary of the markets. Don't be greedy. Don't be in the markets over leveraging. It's never a time to over leverage, but if not any time, like if there's never been a time that you should leverage, like now is not the time. All right, to over leverage. Now is not the time to be trading without a stop loss. Now is not the time to be betting your maximum amount of risk. All right. Understand that the markets are going to be unpredictable. Anything can happen. I'm talking about when it comes to news wars, war news. I'm pretty sure we can see a crazy amount of movement in the market. All right. And this is a time that accounts can be blown. So just be wary of that. And stay weary in the markets. Stay weary in the markets. Stay careful. All right. Let me go ahead and go through comments real quick before we move on. All right, Litecoin, yeah, we definitely gonna get to that, Denver. Yeah, Lou Martin was saying. So Lou Martin said Putin is not to be trifled with. Yeah, for sure. Yeah, he's not a joke. Out of all the diplomatic leaders that I've seen, he's the one that he the real deal. All right, the second thing that we need to be weary of. Second thing we also need to be weary of is interest rate hikes. All right, interest rate hikes. So one of the major banks, JP Chase Morgan, they expect the Federal Reserve to hike interest rates for 9 straight meetings. All right, and 9 straight meetings means 9 straight months. As we approach March, we are now approaching the end of the first quarter. All right, so trading and investing is broken up into quarters. There are specific or significant movements that happen quarterly. All right. And so what's going to happen is they're going to start hiking interest rates in March. And so this is going to cause pairs to start trending. All right. So Rodolfo, to answer your question, is getting around that time where we should see an opportunity to get in for a position trade. All right. And with them hiking interest rates, what this means for the dollar, if they hike interest rates, this is going to be positive for the dollar. All right. Negative for the consumer, but it's going to be positive for the dollar. So what we should see is an increasing price on the dollar, or we should see the dollar start to trend up and increase in value. And everything that is going against the dollar should start falling. Right. So that's something else to be aware of. Now let's go ahead and get into the technical analysis. First things first is EU. All right, first let's look at what happened last week. All right, so those are the 3 shots that we took out, the 3 areas that we identified. And what I wanted to point out about this, if you're taking notes, notice how the market, we got in for a buy here, we got in for a sell here, we got in for a sell here. Notice how the market didn't continue in one direction for a long ways. All right, a mistake that a lot of traders make is they believe that the market is going to go a certain distance, or the greed sets in and they want to bag a large amount of pips. And what's important to understand about this strategy and how you're going to win with this strategy is by just focusing on the reactions and understanding that that's not the way the market moves. The market doesn't just go in one direction. All right, it goes up and it goes down. When it's going up, it's going down while it's going up. When it's going down, it's going up while it's going down. All right, so with that being said, you focus on the reactions. All right, we bought here. You see the market sold at this point, but it didn't just continue selling. Eventually, it went back up. All right, it went back up. And if you wouldn't have took profit, you would have got stopped out at break even. And if you didn't manage your trade and have it at break even, maybe you had a stop loss. All right, the market went up and maybe stops you out. All right, we sold from this point. All right, and it sold off, and then it came right back up to the entry. And so what we've done is we've created a range. This is really a consolidation, but it's consolidation within a downtrending market. So let's go ahead and switch to a more clean chart. All right, so for all of my students who are learning the sniper strategy now, the advanced classes, all right, for all of my students who are in the advanced classes, I have this area highlighted right here. I want to see if anybody's been paying attention. Go ahead and drop in the comments box what that is called. What is that? What do I have highlighted on the screen right now? Who's been paying attention? All right, and while we going over that, we got a question, got another question. So Rodolfo asked, do you recommend new traders to trade US 30 or NAS at all? And are indicators another way to snipper in? All right, so when it comes to trading anything, so US 30 is volatile. But if you understand risk management, it doesn't matter if you trade US 30, which is one of the fastest pairs, or if you trade AUD USD, which is one of the slowest pairs. It doesn't matter. All right. As long as you understand the amount of pips that price is moving, you can trade anything. All right. There's no such thing as a beginner. There's no such thing as a beginner pair. It's all about risk management. Price moves in every single market. It just moves a certain amount, but no matter how volatile a market is, your risk management should be the same, which means it really doesn't matter. All right. It really boils down to what you're comfortable with, and if you can basically um, if the pair works well for you, if it moves the way that you like it to move and it becomes a fit, then yeah, go ahead and trade it. But focus on risk management and make sure you understand the pip count of the pair that you trade. And that's the most important thing. Understand the pip count of the pair that you're trading and make sure you understand how to do risk management. All right. LDC said imbalance, gap. Oh, no. All right, Angel, I seen you drop GU. You're on the call. All right, what's highlighted? What is this? What is this red area that I highlighted? I know somebody got to know it. I'll give y'all about 60 more seconds and then we'll go ahead and get into it. All right, so gap that needs to be filled, imbalance. That is true. It is. That is imbalance. But there's something specific about it, and me's got it. This is called a dagger. This is called a dagger, ladies and gentlemen. All right, so what's specific about the dagger is it is a indication that the market makers want to push the market in a certain direction. And with that being said, I have a seller's bias despite us being in. Let's go ahead and go to the higher time frame. Where is price at right now? What do we call this? We call this a consolidation zone. Anytime price comes into an area that previously consolidated, more than likely is going to consolidate again. Okay, so we have a previous known consolidation area. This is well known. All right, we consolidated for a long time. This is where I took the least amount of trades. Like I think I went like 4 weeks without being able to place a trade because it was consolidating. And so we've entered back down into that range, but we have evidence that we could be heading down to at least the bottom of the consolidation. All right. So these are my beliefs. I believe that we're in the consolidation range, but we're falling from the top of the consolidation. We treat higher time frame consolidation just like we treat lower time frame consolidation, right? And I see EU selling, so I'm going to be looking for sales. All right, let me check the comments real quick. Sell. All right, so since we're looking for sales, there's a specific range that I'm working within. All right, and the last sweep was this wick right here. We had a wick that went up, and what makes this wick significant is these highs, or the highs that it took out. All right, so we've taken out some highs here. We've broken some structure. We've come back up, and then we've got evidence of a sweep, and the sweep happened at the top of a known consolidation area. So I have a very strong bias that we're headed down. All right. Now, as far as what I see on the 4-hour, we're currently buying, or we bought from this area and we came back down to it. All right, y'all see that? Now we've come back down to this area. The next area I would like to see EU reject from is down here. All right, it's towards the bottom of the consolidation. We have some evidence of institutional movement or institutional action. And then on top of that, we also have some lows down here. All right, I'll see that. Got a low right here. And then we have these lows here that need to be taken out. So on the lower time frame, this is a little, it's small, but it's a little imbalance here, resting below some lows. Also don't want to count these highs out here. We'll look at that when we get down to the lower time frame. All right, so we did create some pretty like close highs here. All right, so this is something that we will be looking out for. As far as sales, the first sale is going to be within this range here. The first sale is going to be within this range here. The second sale, if we clear these highs up here, is going to be within this range. All right, this is the high where, the stop loss would be, where we would stop selling, because if we come back above this area, then more than likely they're changing direction. There is imbalance to be filled here. All right, so we have our target at the bottom, and then where could we sell from? I really like this area here. All right, I like this area here. We have some imbalance. We have a pullback. We have an extension. We're looking at this on the hourly. All right, pullback, extension. Let's see how much that first pullback pulled back. About 38%, so that was a shallow retracement. Let's see where the extension is. And we've extended to the 1618. And so more than likely we're starting to turn around. We're starting to reject. It may come down to the 200, but I got to see this pullback happen before we get in for the sale. So if we're pulling back from here, first one was 38. That would be about the golden pocket, or 618 golden pocket retracement. Let's drop down to the lower time frame and see what we see. I also like this area too for a sale. Let's see what's the difference between the pip difference between these two zones. All right, yeah, it's about a 30 pip difference. See what it looks like on the 15. Okay. Yeah, guys, this is what I'm going with. I'm going with the first sell zone here. All right, so our first sell zone. First sell zone is in between price level. Let's call it 1.13350 and 1.13430. So that's about a 7 pip sell zone. It's a range of 7 pips. All right, so what's considered a reaction on EU? If you've been following me for a while, you know how many pips I go for on a reaction trade. All right, we want to focus on the reaction. How many pips is a reaction on EU? All right, so we have our first sell zone reaction, and then we have our first buy zone. $20 pips, exactly. Good stuff, B. Good stuff, Mies. All right, so we're looking for 20 pips on these. We're looking for 20 pips on these reactions, y'all. All right, so from the first sell zone, we expecting 20 pip reaction. All right, so the setup is going to go like this. Depending on where you get in, we going short. Let me drop back down to the 15-minute. All right, so 20 pip stop loss, 20 pip take profit. 1-to-1 ratio. Now, if you see the sell going all the way down to the buy area, which would be a range of, if you played it safe, 60 pips, playing it safe. That's the most. That's the most I would go. All right, we come within 10 pips of our buy zone. All right, this is where I want to take my profits. You could turn this trade into a 1-to-3 risk to reward ratio. If you're going to do that, I recommend splitting your position in half. All right. So whatever you would normally trade, split that in half, or whatever you would normally risk, split it in half and have two positions. One position you close out at 20 pips. The next position you close out at 60 pips. But this is the setup for the sell. And same thing for the buy. Let's go ahead and mark up the institutional level that's down here. So that's where we would get in at. All right, so we got some confluence. Buy area, I would get in at that price level, 1.12500. All right, so we are playing. We are playing off of higher time frame consolidation, treating this like higher time frame consolidation with the bias that it's going to sell from where it's at. And once we get down to the bottom of the consolidation, we have evidence of a buying area. We have the bottom of the consolidation, and we're just looking for reactions. All right, so that is it for EU. Now let's go ahead and get into what you guys want to look at. So we got GJ. First on the list is GJ. And let me go ahead and make this full screen. Drop a 2 in the chat if you can still hear me. I know last time I made the full screen, nobody was able to hear me. Drop a 2 in the chat. Just want to make sure everybody can still hear me. Okay, good. All right, let's get to it. All right, so last week we called a sell on GJ. I didn't change anything. This was the sell zone that we marked up. And as you can see, eventually it did come up there. It didn't come up there until I believe the end of the week, but we did come up there, and so far it's reacted 180 pips. All right, so it sold off 180 pips. It filled the imbalance here, came up to the first sell zone. If you were going for 20 to 30 pips on GJ, you got that easy out of that move. All right, and now we're also reacting off of an old buy area. So we found some support, and GJ is pretty much in the consolidation zone as well, consolidation range. Let's look at this from a higher time frame and see what's going on. All right, we had a sweep of some highs here as we headed down. And this is looking real ripe for the taking. Y'all see this? Look at that retail money right there. Look at all that retail money right there. All right, so this is a target. This is a target for us to basically where the market is more than likely headed to. So I believe GJ is going to push down some more. All right, even though we're rejecting strongly and creating a wick on the 4 hour, I do not see it. I really don't see it. Hold on. I don't see it coming back up past this area. All right, so let's go ahead and make this a sell zone, and then we'll drop down to the lower time frame. All right, a gem I want to throw out there for everybody. It doesn't matter what time frame you trade on, whether it's the 15-minute, the 5-minute, the 1 minute, the 1 hour, the 4 hour. You always want to be looking at the chart from the higher time frame. Now, when it's time to take the entry, that's when you drop down to the 15-minute. It doesn't matter what time frame you trade on. When you're looking for precision, you got to drop down to the lower time frame for precision. All right, so I've marked up a sell zone. This is a 4 hour sell zone. This is a 4 hour sell zone, but I'm going to find my specific area the lower that I drop. All right, and if it still continues to line up with what I have, then that'll be the area. That is the area. That is the area. But now that I'm down here, I also see an area here. All right. But I'm gonna stick with the first area. All right, so I'm expecting GJ to at least react off of here. I don't know if it's going to continue down from this point. We never know, but I am expecting it to react from this area. Let's see if we can find some confluence. Do we have any specific institutional levels? Yes, we do. So we have a small figure level here. And so that's the area I'm gonna sell from. All right, so we're gonna sell from 156.250 on GJ. And as far as where I see it going, the targets that I have in mind, like within the next couple of days, I'm expecting some of this retail money to get taken out. All right, all this stuff, this is too clean. Too many people bought this trend and didn't get taken out. Too many people winning right now. There's too many people holding on to trades thinking that GJ is just about to shoot up. All right, so even if it is going to shoot up, more than likely they're going to come for this retail money first. We got a low here, and then we got all this whole trend line here that needs to be taken. It's a lot of liquidity. Yep. So we have a previous floor that is now more than likely a ceiling. We have an institutional level in that area, and we also have some other identifying factors of why GJ is more than likely going to sell from this point. So first sell zone, action. What's the trading window, guys? If this happens outside of the trading window, we don't want to take the trade. So when is it okay to take this trade? Between what hours is it okay to take this trade? All right, so we just went over GJ. Gold, we can look at gold really quick. All right, y'all, so in between the price levels of 1.56250 and let's say 1.56350, which is a range of 3 pips, that is the sell zone on GJ that I see. The next buy, I don't see anything attractive as far as the next buy until we come back down to the old buy zone, which is down here. All right, so before I get in for a buy, I want to see all of this get taken out. All right, let's look at gold because news, the war is definitely affecting gold. Gold is bullish, without a doubt. All right, so looking at it from the daily, gold is bullish. We finally starting to break out of that consolidation that we've been in for, since back in January of 2021. All right, finally starting to break out of that consolidation, but we know how the break and retest strategy is. We starting to break out of consolidation. I would not be surprised if we come back down into the consolidation. The buy zone that I'm seeing is right here. All right, I'm not taking a buy on gold, and I don't trade gold, but what I'm saying is if I did trade gold, I'm not taking a buy on gold until it comes back down into the consolidation, into this area. All right. And it would really be nice if we could clear this high first before that happens. Or if we come up here and create equal highs. All right. So what I'm going to do, and what you should do as well, is draw a line from the top of this high all the way across. All right, if we come up here and we create equal highs, that creates an even better chance or a better look for a buy. All right, we got some imbalance to fill over here. Let's drop down to the lower time frame, get more specific, see if we see any more evidence of anything. I'm gonna highlight these lows right here. These are significant. Also gonna highlight this area here. Looks like we got a mitigation area. Let me delete this consolidation zone. More clear. Drop down to 1 hour. Ooh. Let's see. That look clean there. Okay. Balance. I like this purple zone. I like this purple zone for the first buy area on gold and the green zone for the second buy area on gold. Yeah, the way we consolidated, created this high, we ran up beyond this high. If we come back down, I would like to see a reaction from this purple area. And as far as the sell, I do see a sell zone. I believe this will be another high probable reaction if we create equal highs right below this low right here. All right, so this would be the sell zone. All right, so we have a sell zone between the price of 1,940 and 1,000, let's say 950. So in between 940 and 950, which is a range of 100 pips on gold. And then for the buy zone, we have a range, let's call it 1880, 1,880 and 1,870, which is also a range of 100 pips. All right, so we have a buy zone and a sell zone that is a range of 100 pips. Oh man, I appreciate that, Rodolfo. And like I said before, man, I love the support and I love the effort for you even, coming to the call and trying to learn. All right, guys. So that's what I have for gold. Now let's go ahead and move on to GU really quick. Let's see what time it is. 8:53. All right. Let's see if we can hurry up and get this done. Right. Following the footprint, we came up and we reacted from this sell zone. So you got some clean highs up here. All right, so even though I'm expecting EU to sell, GU sometimes, even though they move similar, sometimes GU can move the opposite. And so we got to take into account these highs that we have up here before it completely sells off, because it looks like it's kind of consolidating right now. You're looking at this on the daily, and we are working within a range right now. Y'all see from here, from this price level up to this price level, we've been ranging in between this price level. So when you see that, we're creating liquidity on both sides of the market. All right, so there's liquidity below these lows, there's liquidity above these highs. So we could go either way. But whether it goes up or down, I'm pretty sure we can find areas for reactions. I wouldn't want to personally, it looks like it's falling from here, but we got these equal highs that we left. So let's see. All right, boom, we reacted from here. All right, Angel. So you already know if we, let me see, boom, didn't really break structure. It's still a significant area. Yeah, so I'm gonna go off the area that I identified. I don't even know when I identified this, but I still would be waiting for this to happen. All right, we have some imbalance here. It's below lows. I like taking trades that are below lows or above highs. Those are the most high probable trading within the structure can be tricky. And then when you have equal highs and equal lows that have been left behind, it's always a possibility they could run back up. And so the way I'm feeling about GU is I want to see it come down. I want to see it come down here. Now, of course, it's reactions that you can catch within this structure, and I've seen you've been doing that, Angel, and that's cool. But me personally, looking at GU, it doesn't move like EU, and so I would not be comfortable doing anything with inside of this range. So I will want to wait for it to come down here. All right, that's what I see. And then for a sell, I would like to see it run above these equal highs that they created here. That's what I see. Highs here. Some imbalance. All right, so this will be my first sell zone here if we run above these highs, and I'm only looking for a reaction. All right, so for GU, I would like to see it for a sell. We'll do that. We'll do that small figure. We'll do that small figure level. All right, so price level 1.36750, but the zone is in between 1.36690 and 1.36, let's say 790. All right, so a range of 10 pips. Or I'm sorry, not 10 pips. Oh, yes, that is. That's a range of 10 pips. All right, so above the equal highs, sell zone here. And then I will have to just wait, on that buy reaction, which is in between. That's a half figure level, right? 1.34500. So in between 1.34550 and 1.34450 for that buy zone on GU. All right, I did want to go over Litecoin really quick. All right, so we got 1 more minute left. And let's see what's going on with Litecoin. All right, so remember reactions. You're gonna trade cryptocurrency. Like I was telling one of my students earlier. They asked, "Do you use this strategy with cryptocurrency?" And I said I do, but only for position trades. I don't use it on the day to day like how you see me doing with EU. But we did come down to a buy area, and depending on where you got on, the only opportunity was here, really, and that reacted almost 800 pips. That was an 800 pip reaction from the buy zone. But as you can see, this buy zone has failed. And now when this happens, this has now become a mitigation area or mitigation zone. And so from the higher time frame, we already know the uh, the crypto market is bearish anyway. All right, there is really a bearish bias on the cryptocurrency market, and so because we've dropped below this zone, now I expect Litecoin to play around in this area but continue further down. All right, so now we're looking at these lows to be attacked here, and now we go out to a higher time frame and we see what are the next targets. All right, what's the next area or next level of resistance? And so where we'll more than likely find support on Litecoin, just based off of a market structure, technical analysis, is going to be this area down here. All right, and I actually believe so long term. I believe when Litecoin gets down to in between, let's call it 85 cent and 70 cent, all right, or $70, $70 and $85. If you invest in Litecoin, I believe that would be a good place to get in to hold long term. You know what I'm saying? If you're gonna hodl it, that would be more than likely a good place to get in, because that's about, sheesh, I would say that's about an 80% pullback. And historically, cryptocurrency is known to pull back about 80%. All right, so got some confluence there as far as long term. I believe this will be a great price to buy from, because Litecoin has gotten all the way up to $414, and technically it's on sale where it's at now at $102. But I believe in between $85 and $70, it would be a good place to get in long term on Litecoin. But that wraps it up for this call for Markup Mondays, ladies and gentlemen. Um, I hope everybody got value from the call. I hope you guys, learned something. We do this again every Monday at 8 p.m. If you have friends and family who are interested in learning how to trade, just have them come to this call. And if you're interested in taking it to the next level and actually learning everything that we do, right? Everything that we do and how we do what we do. Of course, we have the Snipers Anonymous trading course that I came out with. Great course, great review so far. We've been accepting enrollments for about 5 months now, and students have been coming in. Those who have been consistent, actually going through the course and making it to the advanced lessons, they've been seeing amazing results. And these are even people who have experience, people who don't have experience. I mean, the strategy is it's crazy. I come on every Monday and I show everybody like this is it. This is what I do. And it's really a simple strategy, really. And it works. It's a lot easier when you have a team to do it with you. All right. But again, that wraps it up for this call. I will see everybody in the chats on the charts. I'll end up posting these markups for everybody inside of the chats. And then for everybody who requested it, if you aren't a student, I will post it on my page. So you'll have something to come back and reference for your trading for the week. But I love you all. Thank you all for tuning in to this call. I wouldn't be able to do this without you. And I will catch you all next Monday at 8 p.m. And remember to always stay safe, but stay dangerous. Peace.